Hey everyone, it's Emily Carter here. Welcome back to US Stock Stories. Today we're brewing something special. Starbucks SBUX, the world's most famous coffee brand. Once seen as unstoppable, Starbucks is now facing tough questions. Is this iconic company losing its flavor, or is it preparing for a fresh comeback? Let's dive in. Starbucks operates over 38,000 stores across more than 80 countries, serving over 100 million customers a week. But here's the interesting part. Its stock has underperformed the S&P 500 over the last 18 months. While the market surged on AI optimism, Starbucks dropped nearly 20% from its 2023 highs. Why? That's what we'll unpack next. First, the elephant in the room. China. Starbucks counts China as its second largest market, but same-store sales have fallen by more than 6% year over year. Consumer spending is slowing, and local competition, like Luckin Coffee, is booming. Then there's rising costs. Labor, coffee beans, and rent are all getting more expensive, squeezing profit margins. And don't forget the unionization wave. Over 400 stores have voted to unionize, which could push costs even higher. But here's where Starbucks is fighting back. CEO Laxman Narasimhan has launched an ambitious strategy called the Reinvention Plan. The goal is simple: to make Starbucks faster, smarter, and more global than ever before. They're expanding aggressively into high-growth markets like India and Southeast Asia, where the middle class is booming and coffee culture is still on the rise. At the same time, the company is investing over $3 billion to modernize its stores, making them more efficient, more digital, and more comfortable for both customers and employees. And one of Starbucks' biggest strengths is its mobile and rewards ecosystem. The Starbucks Rewards program now has over 33 million active members in the US alone, accounting for more than half of total sales. That means millions of loyal customers coming back, not just for coffee, but for points, perks, and personalized offers. It's the kind of digital loyalty that most brands can only dream of. Now let's talk numbers, because every great story needs data behind it. In fiscal year 2024, Starbucks brewed up $36 billion in total revenue, marking an 8% increase compared to the previous year. That's solid growth, especially in a challenging consumer environment. Operating margins came in around 16.3%, and earnings per share climbed by 12%. So despite inflation, higher labor costs, and global uncertainty, Starbucks managed to keep the profits flowing. But here's the catch. Wall Street isn't fully convinced yet. Analysts expect only about 5 to 6% growth in 2025, which suggests the market wants to see stronger momentum before rewarding the stock. Right now, Starbucks trades at a PE ratio of around 22, which is slightly below its 5-year average. That tells us investors aren't overpaying for hype. They're waiting for proof that the Reinvention Plan is really working. In other words, this might be one of those rare moments when a great brand is trading at a reasonable price. Let's not forget one of the things long-term investors love most about Starbucks: dividends. Starbucks has quietly become one of the most reliable dividend stocks in the consumer space. It currently offers a yield of around 2.8%. And here's the best part. The company has increased its dividend every single year for the past 14 years. That kind of consistency doesn't happen by accident. It shows confidence in their cash flow and a real commitment to rewarding shareholders. And that's not all. Since 2021, Starbucks has spent more than $12 billion buying back its own shares. That means fewer shares in circulation and more value per share for existing investors. So, even if the growth story takes a little longer to play out, Starbucks continues to deliver something investors can sip on: steady income and long-term value. So, is Starbucks really losing its aroma? In the short term, maybe a little. Rising costs, weaker sales in China, and a challenging global economy have definitely taken some of the steam out of the stock. But if you zoom out and look at the bigger picture, Starbucks is still one of the most recognizable and trusted brands in the world. What really stands out to me is how deeply integrated the company has become in people's daily lives. From that first morning coffee to the mobile rewards app and personalized offers, Starbucks has built a digital ecosystem that keeps customers coming back day after day. It's not just a coffee company anymore. It's a lifestyle brand with a massive global footprint. And as the Reinvention Plan takes hold, we could see this coffee giant start to regain its strength and flavor again. So whether you're a caffeine lover or a patient investor, Starbucks might just be worth keeping on your watch list, because great brands rarely stay cold for long. And that wraps up today's stock story. If you enjoyed this breakdown, don't forget to like, subscribe, and tap that bell icon. It really helps the channel grow and keeps you updated with the latest stock stories. Which stock are you thinking about investing in next? Write it in the comments below, and I'll make a detailed analysis just for you in an upcoming video. Thanks for watching. I'm Emily Carter, and until next time, stay curious, stay caffeinated, and keep investing smart.